Hey there everyone, and welcome back to HarmonicForex. My name is Nehat Dias, and today I'm going to take you through how to interpret a trade call from HarmonicForex. So, your trade call will arrive in the form of an email, and I'm going to show you what it looks like. It would arrive from HarmonicForex support, so please make sure that you've added them into your safe list. And of course, you would see your name here. And once you get into the body of the email, you would see the trade idea number. So it's important to remember this because we would refer to the signal by this particular number. So before you get started, it's important that you read the rules of engagement. This is where we talk about how you control your risk, how often you would get signals, and really everything around how to deal with the psychological part of trading. So please make sure you read that before you actually place a trade. In terms of the trade itself, it's quite simple because you would have 6 criteria that you would need to take note of. We will talk about the pair, the direction we're looking to take the trade in, the entry price, the stop loss, the profit target, and finally the risk to reward. So let's go into detail around each of these criteria. So let's take a look at the pair first. So this is the pair that we're looking to trade. It is pitting the New Zealand dollar against the Canadian dollar. So at HarmonicForex, we trade about 25 different pairs, and they could be sometimes quite familiar to you. It could be something like this, which we call an exotic pair. But to us, we really don't look at the economic side of it. We are just looking at harmonic structures, and that's why we are confidently able to take a trade like this. The next thing is the direction. Now, when we say short, we are looking to sell the New Zealand-Canadian pair, which means we anticipate the Canadian dollar to strengthen against the New Zealand dollar. Up next, the entry price. This is the level where we are looking to place our order. The stop loss is the place where we are looking to get out of the trade if we are wrong. And this is perhaps the most important part of your trade, because without a stop loss, you are going to get into a lot of trouble if you choose not to do so. The profit target is where we would get out of the trade with hopefully quite a bit of money. And then the risk to reward is basically a calculation to tell you, if you win this trade, how much would you earn per every $1 that you risk. So in this particular example, you would see that we are risking potentially 45 pips to gain 125 pips. So you divide 125 by 45, you would get your risk to reward ratio. So you may wonder, what does this look like on a chart? Well, I pulled up the New Zealand Canadian chart, and as you can see, we are looking to place an order when the price hits 9095. Don't worry about the 2 triangles. This is harmonics in action. So essentially what we are saying is that we are going to place a sell order here at 9095. Our stop loss is going to be at 9140, which is above this point, which we generally refer to as point X when it comes to harmonics. And we are looking to profit all the way somewhere down here. Nope, way below here. So don't worry too much about how we choose the target profits or the stop losses or the entry prices. This is really based on harmonics, and if you guys are interested in learning it, definitely contact us. We'll be happy to teach you. Okay, so once you have the signal, the next thing you need to do is to go to your favorite platform and place the order. So how do you guys place the order? Well, take a look here. So first of all, you've got to pick the pair that you're trading on. So in this case, it's New Zealand, Canada. Go here, click sell. It'll open up a box, and then you need to go into the limit order portion. And this is where you have to say that your entry price is going to be 9095. You would specify your stop loss as 9140. The target price, very simply, 89 70. So you can see whatever we told you earlier in terms of your stop loss, it is 45 pips. Your take profit is 125 pips. So go back to the email that we sent you. Now, the next part is the most important. How many units you need to sell? Well, this is something that is very, I would say, personal. It's not something that I can tell you that, oh, you must risk only 1% of your account, or could it be 2%? But the thing is, however much you risk, it needs to be consistent. You can't be risking 1% today, 2% tomorrow, 5% the next day, because that really makes your account fluctuate. So I programmed my platform to tell me that, okay, whenever I place a trade, just risk 1% of my account. So in this case, this is the amount that's going to be 1% of my account. So if I lose, this is the amount that I would lose. If I win, this would be the amount that I would win. Remember, our risk to reward ratio is 1 to 2.77. So everything done. You're looking to sell at 9095. Your stops are in place. Your take profit is in place, and you are good to go. Submit. Order accepted. That's it. You are done with your trade placement. So you might be asking, what happens next once I put my order in? Well, basically nothing. One of two things can happen. Either you get your trade wrong and the price would go up, hit your stop loss, and you order the trade. Or this trade would show some reaction around this area and it will go and hit your target. So let's see what really happened on this particular trade call. So once we start moving to the right, you'll see that it almost got hit, then it went up, hit again. You get triggered somewhere around here, and you'll see that the market starts rolling over, rolls over, and it hits your target within a couple of days. Now it does go below your initial target, which is completely fine, but at the end of the day, you have made a very good trade. You risk $1, you've earned 2.77 for every dollar that you've risked. So it looks pretty simple, right? All you have to do is put in your level that you want to trigger your trade at, put your stop loss in, put your targets, press submit, walk away, and you're done. So I hope this trading video has been useful to you. We look forward to bringing you more good stuff. Until the next time, have a great day.